The biggest question at the center of the economy today and over the past 2 years could be, why do we have inflation and whose fault is it? If you're watching this video now, you've probably already heard like a lot of different answers.
Rampant greedflation.
The Fed was too slow.
The global pandemic.
There's plenty of blame to go around, but who's the most guilty? Fortunately, the clever people at the Federal Reserve came up with one way to break things down. Take a look at all the stuff that economists use to measure inflation and see how much of the price increases on each item come from higher costs that the businesses themselves have to pay versus how much of the price increases come from companies just charging more money for the same item. In a paper earlier this year, looking back at 2021, the economists came up with a pretty clear answer. Most of the inflation came from companies raising prices more than what they needed to cover costs. Markups surged in 2021 as companies started charging higher prices and making more money on what they sold, even though their own costs weren't going up as fast. So it kind of seems like, but wait, that same group of economists said that companies probably raised prices because they expected to pay higher prices in the future. Plus, 2 years after the recovery kicked off, corporate profits became way less important to the inflation calculus than rising costs. So even if companies were mostly to blame for rising prices back in 2021, the picture today is very different. And things are still changing from year to year or even month to month. So if you want to know what's happening now, watch out for major economic data and quarterly earnings reports. Record profits could mean more high prices are coming up.